Hey, what's going on, guys? This is TerrenceRe, and I'm back at you with another video. This video is going to be more of a tutorial more than anything else. And what is liquidity and how to identify or find liquidity in the markets? So, first of all, let's go over just what a regular definition of what liquidity is, and then we'll go a little deeper on how that applies to the financial markets. So, liquidity, the availability of liquid assets to a market or company. Liquid assets, cash, a high volume of activity in a market. So, that's the Oxford definition. Like I came straight out of that. Now, what we think of, now to make it simple, so liquidity is basically when we think about it in the everyday life, like how fast can you get liquid? Like how fast can you get your money, get your hands on your money? Most of us, you may have some cash laying around the house, or somebody say, how much cash you got liquid? Well, I got a few $100 in my pocket right now. I got some money in my savings, checking account. I can go right there and go get it real quick, real quick like. So that's what you have available to you right on hand. Excuse me. Now, you may now something that may be illiquid may be looking at, you got some cars. Oh man, if I had to, I could sell my cars, or I can go pawn my watch. I might have a Rolly. I can sell that. I can go get, but how long is it gonna take for you to get that? Might take the Rolex to the pawn shop or wherever you taking it to get some money. That may take you a little bit more time. And he may give you some money, but then he gonna lowball you, right? Um, selling your car, somebody got to buy it. You got to come to agreements with a seller, excuse me, with a buyer. So you're the seller, and you decide where you're going to sell it on, I don't know, Facebook Marketplace, wherever, right? And how long is it going to take for you to get that money from that? You want to sell your house. Now that's something that is that may take a little longer. That may take months. Get somebody. You got to get it appraised, put it on the market. That may be something that may be illiquid because you can't get to it. You can't get your money out of it quickly, right? Um, so all of these are in terms of like liquidity. Basically, how fast can you get your money back out of something that you have put into it? Keep that in mind when we're talking about the markets. Now, the reason why I'm doing this, I'm in a little what you want to call it, like a group on Messenger or WhatsApp or whatever. And you know, most of the guys in there invest and in trade and stuff like that. And one of the guys was talking about how he started doing paper trading, and he was killing it paper trading. And then when he went to real trading, the results weren't the same. And one of the reasons why that is because when you're paper trading, it's hard for the paper trading or to simulate for them to simulate the buying or selling of options and stock as well, because you're going to it makes it seems like everything is liquid, and your option trades and your stock trades, they get filled instantly at whatever price you put in for the most part, and you get filled. It's not, and then when you go to real trading and you're in the real markets, it's not that simple. The financial markets are probably the best example of capitalism that we have in the world. Because if I were to, now this is after hours when I'm doing this, so I can't, but if I were to buy some Tesla stock, if I bought a share of Tesla for one, right now it's saying last when the market closed was 191.97. So if I bought a share of Tesla stock at 191.97, or I put in an offer to buy, like I hit the ask and I wanted to buy it, like click right there, and I want to buy. Now, someone may not want to sell it to me at that price. They could say, well, no, we're not going to sell it to you at that price. And they could say, they want to sell it at 191.99 or 192. And so that bid ask, the difference in that bid ask is what they call the spread. Similar to making an offer on a house. Seller wants to sell the house for 1 million. You come in at um, I don't know, 950,000, right? You come in 50,000 under, and then maybe he comes down and you come down. That 50,000 is the bid ask spread. That's the spread. So in the stock market, it's if you're trading illiquid stocks, then that bid ask spread is going to be wide. The less liquid something is, the further the seller and the buyer are going to be apart, if that makes sense. So you can do if that so a better example would be to when the housing market was really hot, houses couldn't stay on the market. That's because the market was really, really liquid. You had low interest rates, which was causing buyers was out here buying, sellers was selling, and you couldn't keep houses on the market. The same way it's like that in the stock market when you're trading liquid stocks. Tesla, I use Tesla because Tesla is liquid. Apple, Meta, basically anything on my watch list. When you see Netflix, Nvidia, Boeing, Caterpillar, when you come to the ETFs, the SPY, QQQ, IWM, TLT, GLD, excuse me, XLF, XLE, Microsoft, these are liquid stocks. These stocks have tight bid ask spread. So when you come to the bid ask spread, if I click on the SPY, you can see the ask up here is 507.08 and the bid is 507.01. Now, and this is after hours and it's only a 7-cent difference. So that means if you click the buy it at 507.01, the most you're off is 7 cents. That's a liquid stock. You're not losing a whole lot of money getting in and out of a trade in this stock. Same thing with options. Now, if I come to the option chain and I'm going to go to the March 15th, the monthly, look at now, this is after hours. Now, when this market is open, these are penny wide more than likely. I mean, even after hours, you got 635 for this call option, 638. So the bid is 635, the ask is 638. That's only a 3 cent wide spread. That lets you know it is super liquid. Super liquid. Now, at the same time, I'm going to come to an option. I'm going to find an illiquid option, and I'm going to find one on purpose to show you guys what something that's not liquid. Let's see. I'm actually in high options volume. I'm gonna go somewhere else. Let's try. So what I'm trying to do now is find an illiquid option. And let's see, let's try this. Let's go to, matter of fact, we're gonna go to sectors, market indices. Let's go to the S&P, maybe 500. No, CRE, hospitality price return off. I'm trying to find something that is illiquid. So I'm gonna come to, I don't even know what this is. CRE, residential price. So I'm on the TastyTrade platform, which is what I use 99% of the time to do anything. If you look up here, you see the star system. real quick. They're giving you a liquidity rating. And I came to a sector that is illiquid on purpose. And you can see this one has 2 stars, 3 stars, 1 star. I'm going to go to one of these ones that is 1 star on purpose so we can see what an illiquid stock looks like. Let's go to this option chain. You can see we don't have as many. First of all, first thing you should notice is that we do not have a lot of expirations. So we're looking at CPT, Camden Property Trust. I'm gonna click back on the SPY. Look at the SPY. So right then and there, that should let you know one of the things. Even if you're not using TastyTrade, and you come to the option chain and you see where you don't have that many expirations, as opposed to something that does. This is liquid, illiquid. Automatically, I'm not saying that you can't trade something that is illiquid. I'm saying that maybe you shouldn't unless you really know what you're doing. Now let's go to March expiration. You see now this stock is only $94.81. The SPY is 5 times that. Now look at the bid ask spread. Even though this is after hours. So when the market opens up, this will tighten up, but it still shouldn't be this wide. You see this? The ask is $4 and the bid is 80 cents. So that means that for this call option over here, you could pay anywhere between $80 and 400. Really, really wide. On Friday, only 7 people traded. There were only 7 contracts bought or sold at this strike. Let's go back to the SPY again. Same. We go to the monthly. 510,000 on open interest. Let's go back to CPT. Open interest. 7. 7 open contracts. Back to the SPY. 510,000. Now, excuse me. That right there, I'm showing you examples on how to identify liquid. I'm giving you an extreme liquid, and I'm giving you an extreme illiquid option contract. Even if you lose stock on CPT, look at the bid ask spread after hours: $103.70, $85.81. That's almost $20. So what that would mean is if you're a trader, that means that you got to come in here, because if you just click the buy and you just buy it, you could pay, you could get filled at like 100, right? And it may only be worth somewhere around 86, 87. Now you could come in at the low area, right? And then try to penny it up. But I would say just don't trade this at all. You're gonna lose money trading stuff like this. Most of the time, you're gonna lose money. So you could depend on that's why I advise people to use TastyTrade. They just tell you what's liquid and what ain't. So if you come over here and like I got this pulled up, you look over here to the right, it got 1 star on the liquidity rating. So you could just stay out of it. Now, I'm gonna give you a normal. I took a real extreme, like the SPY's the most liquid. So let's take a look at something like Apple. Let's go to see. Look at the option. Look how many different expirations you have, right? So let's go to March. 10 cent wide. 10 cent. Look at how many contracts you got right here. 2,000, over 2,000 contracts. 37,000 right here. 30,000 right here. This is correct. 61,000. In some cases, you got more contracts here than you did in the SPY. Let's look at Tesla. Let's go right here. Look at it. Tesla is almost a $200 stock, 10-cent wide. So when you're putting on your option trades, you're getting filled uh, close to the bid ask spread to whatever you put in. Like you could, that means in here you may lose $5 on if you could put in the mid price at 830, you probably get filled. Now, if you were trading, let's say CPT, let's say you were trading this on in your paper trading account, it may fill you at a great it'll fit. So you were selling this, it may allow you to sell this for $400. When in a real account, you will probably only sell this maybe a buck 50. So it will make you look like you made two fifty, $200, $300 on this trade when you really wouldn't have made that in a real account. And the system can't simulate that in a paper trading account as opposed to trading in, with real money. All of these are ways of identifying. So when you want to trade something and you don't have TastyTrade, first of all, if I was an option trader, I would be trading on TastyTrade. I have a link in the show notes to sign up. If not, if you're not, you got Webull, Thinkorswim, Interactive Brokers. Who else are people using? Whoever you may be using. First thing you want to look at is the bid ask spread. Compare it. If you got a wide, if it's more than 5 to 10 cent in the option market, you shouldn't be trading. If it's a large stock, let's go to something like Nvidia, which is $788. Let's look at March. Now, on Nvidia, because it is so expensive and it is so volatile and it is moving a lot on here, even with this large stock, it still has a tighter bid ask spread than CPT. It's only 40 cent wide right here. That's $40. So you may say, man, that's a lot. But when you paying the price of the option is $3,400. Excuse me. So 3,400 to 3,440. It really ain't a lot. It's not really wide when you're looking at the price of you spend. If you're playing, excuse me, if you're paying $3,400 or you're and they say an extra 40, you really like, all right, okay. So you want to come somewhere in between here and maybe offer up if you're buying this maybe 34.20. See how liquid it is. Now you after you identify the bid ask spread on options. Now this is options. Same thing with the price of the stock. Look up here. See how it's only a two, right? 785.80 and 787. That's a difference of uh $1.20. CPT was almost $20. It was like $18 and some change. So you want to identify if you're buying and selling stock, you want to look at the bid ask spread up there for the stock price. And when you come to the option price, the second thing you want to look at is the bid ask spread between the at the money. I will come to the at the money, which is going to be right around 50 delta. You can use call or put side, doesn't really matter. I just using call because generally most people don't sell options. They don't know how. So they're looking at buying calls. That's a whole nother video. But and you can identify, look at the spread here, and it's 40 cents. So you want this to be tight and you want that to be tight. Now, the third thing you can look at is open interest. You want to see contracts in the thousands. You can look right here and you can see thousands of contracts. That's it. Bid ask spread on the stock price, bid ask spread of the at the money. The at the money is going to be your 50 delta. Right around at the money just means right where the stock is actually trading. It's $788. You see right here, we're right here what his line is on the option chain. You want to look at the at the money, bid ask spread. And then the third thing you want to look at is open interest. You want to be trading stuff that are in the thousands. That lets you know that everything over here on my watch list is going to look like this. You could look at Netflix, come to the monthly, the front monthly, you see thousands of contracts over here, open interest. That lets you know these strikes are liquid. And you look at the bid ask. So that's what you want to, that these are ways to identify liquidity in the option market, in the stock market, period. Whether you're buying and selling stock, buying and selling options, that is the best way to do it. So hey guys, um, also I want to before I want to cover everything. If you're on Tasty Trade, you can look at those things, but you can just come over here. See Netflix got 3 stars. Netflix has 3 stars right there. Click on Apple. Let me click on Apple. Apple got 4 stars. 3 and 4 stars. That's where you want to be. Tesla, 4 stars. Nvidia, 3 stars. Spy, 4 stars. See, Tasty Trade has made it easier. Well, you don't, the things that I showed you if you don't have Tasty Trade. So if you have Tasty Trade, just look at the stars. On Tasty Trade, you can filter by that. So now this area right here, I'm gonna turn this into a watch list. I'm gonna click right over here where these little lines are. It says watch list. Bam. Now, I'm gonna come up here and I'm gonna pick one of the predetermined watch lists that they have. Let's look at Tasty. Let's look at Tasty, and it will come over, and we're gonna click on default. Tasty default. Now, I click this little check mark for auto refresh. Now let's come over here to where it says filter. Now I'm gonna reset. Now this is how I will drill down. I'll drill down on what I want to trade or find me something to trade. If I want to sell options, I want something with a IVR of 30 or more. So I will come over here and I will say, first thing, if I don't want to trade earnings, I want to exclude earnings. So I'm clicking that dot. I'm going to exclude earnings and I want everything excluded from 0 to, let's just go 20 days. So that's gonna you see how you probably seen it change. That's gonna anything that has earnings from 0 to 20 days, it's gonna exclude that from this list. So then that way, whatever I decide to trade, I don't get whipped around. Next thing I'm gonna go to, remember I said IV rank. If I'm looking to sell options, I want the IV rank 30 or better. If it's in an equity, if it's in an ETF, you got a little bit more wiggle room. So I will come over here and take the 0 and drag it to 30. You can see right here. Now look, that knocked out a lot just from there. Now I got click, no maximum limit. Excuse me, no maximum price, no maximum limit for volume. Now I could also change the volume on here as well, but I'm not gonna do that. Now I'm gonna come on here and take off 1 star for liquidity. Look at that. 2 star for liquidity. Look at that. Now look, I only got 1, 2, 3, 4, 5, 6, 7. If you don't count the VIX, you got 6 things that you can trade or that I can trade. Now this got a negative IV. I don't want that on there. So let's see. Think if I take that off. So that in that way, that doesn't put anything on here with a negative IVR. That doesn't put anything on there with anything above 100. Now I got 1, 2, 3, 4, 5 things I can trade. So any one of these, I can come in here and sell options if I wanted to sell options. I'm telling you guys, you can use that to drill down and find new stuff. And I could come in here probably when I have a watch list like this, I come in and sell an iron condor because the premium is juicy. I could sell puts, whatever. That's just a way of drilling down to find what you want to trade and using the watch list to find liquid stocks, and everything that I have on here. If I want to trade options, is liquid. You can reset that, and if you and don't take the IV rank out, and it's going to give you more options. But this is just a way of drilling down on the Tasty Trade platform and making sure you're trading something that is liquid, and you're factoring whether the volatility is high or low. You can look over here at volume. Everything over here has millions of shares being traded, and you can use beta weight. I can beta weight it, which means beta weighting it to the SPY, or change. You can change how you want to beta weight things and what you want to make it equivalent to. Dividend yield. If you're looking at dividend stocks, you can come up here and put dividend aristocrats and dividend champions. Um, I could just come in here instead of using Tasty default, just come to let's see, um, liquidity, high options value. Excuse me, high options volume. Boom. So everything on this list now has high options volume, and you see I got way more stuff to trade. It has the same filter on here. Same filter is on here. Now, then I could come up here and drill down, go by the highest IVR. Now, if I want to, bring this in some, I probably would change the earnings and just eliminate all of these. No earnings in maybe the next 35 days. Something like that. Excuse me. So hey guys, once again, if you got something out of this, hit the like button, hit the share button. Um, let me know, comment on the video, let me know what you think. Let me know if there's something else you need to know about liquidity, and hopefully I answered some questions with this video on how to find trades, how to filter, and also there will be a link in the show notes if you want to sign up with Tasty Trade. Even if you use the other platforms, I still would use this platform, sign up, put some money in it, and just use it just for the sake of what I just used it for. It's easy to trade liquid stuff, and there's things, I'd rather just trade without having to worry about getting in and out of a trade and losing money, let alone trying to beat the market, deciding whether you're going up or down. You losing money getting into the trade because you're paying too much, and you losing money coming out of the trade. Remember, whatever you got to give up to get into the trade, more than likely you're gonna have to give up more to get out. So you losing money by trading illiquid stocks, because you're going into it and you got to penny up, you got to pay more to get in, and then when you sell it, you can't get out, so you got to give up money to get out. You give up $2, $3 getting in, give up $3, $4 coming out. You didn't gave up $7 to $8 times 10 trades. It's $80. So hopefully you got something out of the video, guys. With that, I'm gonna be out. Peace.